phase of the AI evolution saw the emergence of the large language models that power generative AI. In the second phase, investors focused on the hardware and infrastructure needed to run these models, bringing chip makers and the hyperscale tech companies that provide massive cloud and data center infrastructure to the fore. We believe we are now entering the third phase of the AI evolution, characterized by the rise of a phenomena we are referring to as services as a software. Hello, everyone. Welcome to the Analytics Insight podcast, where we talk about the ever evolving tech space. And I'm your host, Priya Dayalani. Now, if we talk about private equity firms, they are particularly interested in rapid value realization from investments in portfolio companies. They buy to sell, typically purchasing companies they believe are undervalued and try to improve the performance and financials over the course of 5 to 7 years before selling them. Given the promise of AI's transformative potential, the industry is increasingly focused on how this technology can help. Let's welcome Neha Singh, co-founder of Tracxn, to help us understand more about how these technologies are changing the private equity landscape and as well as what role technology is playing in terms of making investment decisions. Hi Neha, how are you doing?
Hi, Priya. Doing awesome. Glad to be here. Thanks for having me.
Great. It's a pleasure to have you on a podcast, Neha. And of course, when we're talking about private equity firms and role of technology, I think it's a very less discussed topic. And I think we'll be unlocking a lot of insights from your end. And before, we dive deeper into our conversation, let's start by building the foundation or the base by learning more about Traction. So if you could help us understand more about the company and its specialization, it would be great.
Yeah, for sure. So, Tracxn is a private market intelligence platform. So, essentially, we track startups and private companies globally. In terms of our customers, we work with investors, private market investors, which includes our venture capital funds, private equity funds, investment banks, as well as we also work with large corporates. So, for instance, it includes the M&A team or innovation team of large Fortune 500 corporations. And we have customers in over 50 countries, right? So, we would also have customers in Germany who are tracking German startup data through our platform. So it's a global platform, and nearly 60% of our revenue is from outside India, and it's equally split, among investors and corporate. And essentially, we track the emerging technology landscape as well as the companies for them for the daily use case, which includes your deal diligence, your scouting, portfolio team tracking, what's happening in the market, etc.
Great. Thank you for that overview, Neha. And, it's always inspiring to hear how a particular company is changing the industry with its unique approach and specialization. And of course, when, you spoke about intelligence and what different aspects related to intelligence, we will, of course, touch down on those aspects as well and give our listeners a better sense of the innovation that is driving your organization and how you're contributing to the overall industry as well. But before that, we would like to know more about you also, Neha. You have been a venture capitalist at Sequoia Capital, and before Sequoia, you were a consultant at the Boston Consulting Group as well. So, how has your journey been till date, and what led to the foundation of Traction, and what exactly is your role at the company? We would like to know more about it.
So my journey, started in Bombay. So I grew up in a very academic environment, I would say. So I grew up in what is called a BRC colony, in which nearly half of the people are scientists. So including my dad, who was a scientist, and so it's a very academically oriented environment that you sort of grew up in. I did my undergrad in IIT Bombay, computer science. And my first job was the BCG, the Boston Consulting Group, and then Sequoia Capital. So while I was at Sequoia Capital, I was tracking companies that we were looking to sort of invest. And that was the time when I realized that, as a private market investors, we use much less tech for doing our own job, right? And if you look at this industry, this is a very high impact industry. So, for instance, there are a lot of companies who are looking to find the right investors for their companies, as well as investors on the other hand spend disproportionate amount of effort in finding out companies, right? And there has to be like a platform having that information. To give you an example, the what existing in the private market earlier is similar to investing in the public markets without knowing the set of listed companies, right? So that is where we were in the private market. So, we have to like literally find out the companies, that we are looking to sort of invest in. Today, even if you finalize a theme, so for instance, if you like the theme of online brands, you still have to do a lot of effort as an investor to find out the set of companies, right? So that was the problem that we saw. And then, this was across all the steps. To give you another example is that, whenever so you typically meet 4 to 5 companies in a day who's pitching to you as an investor. And for every company, you have to understand, their market, what is the competition landscape, how are they positioned versus their competition. And one of the things which is also happening is that a lot of companies are going global, right? So they are having the peer set, not just, say in India, but you would also be competing with so many companies, especially in the SaaS space, for instance, to global peers. Right. So for every company now you have to do that level of diligence as well. So, and the other thing which was happening is that if there are, like a dozen funds, everyone is redoing the same thing. So if a company needs like, 10 investors, 15 investors, everyone, would need to do this thing over and over again. And we thought that there has to be a Bloomberg kind of platform that exists, like Bloomberg is for public markets. There has to be similar kind of platform that exists for the private market investors. Right? So that's how we started. And we really wish that a platform like this existed. And over time, as we thought more about the financial data aspect, so financial data, if you see the public market comparable, that's a fairly large cash-rich industry, right? So as this asset class of private market is becoming large and important, we realize that, it'll also create platforms like this, and can we build a global platform in this space? So that's how, the journey started. So for me, it was not like, I thought that I want to do a startup and then think about idea. For me, it was more around that there was a problem compelling enough that you came across. And, that probably led to you jumping in to do the startup. And Tracxn got started actually, little over 10 years back. And we started when I was in Stanford. So, when I was studying there, all our initial customers were in the Bay Area. So all the initial customers were in the 10-mile vicinity of the Stanford campus, which includes your VC funds as well as in the corporates. And so, that really helped us to do the initial product market fit, get the initial set of customers, get the ball rolling. And, then now obviously we have more than a 600 member team based out of Bangalore.
That's such a great journey, Neha, and thank you for, putting it down so nicely. And it's really amazing to see how your role overall has evolved and, the kind of impact you have been able to create within the organization and, of course, over a period of time in your journey as well. Now, building on that, let's understand that I think technological advancements have become enablers with AI, robotic process automation, and blockchain driving operational efficiencies. This encourages compliance and helps with decision making. I was reading this study and I found that 41% of private equity firms are in nascent adoption stages. 13% are at the advanced implementation stage of adopting these technologies, and only 7% have fully integrated technology. So, what are some of the core challenges in the private market workflows today that AI is helping to address?
So that's very interesting stat that you actually highlight. It's interesting that private market investors are, so aggressive in investing in new technologies and tracking new technologies. However, for their own internal workflow, obviously they have been more at a slower pace, I would say, in adopting these technology tools. I think it has to do with some of the team sizes. So if you look at it, most of the funds are, sort of fairly limited in terms of the team size, which is there. So a person who's also looking at investment is also looking at, you're hiring your next set of analysts, or who's also looking at what are the other, like your portfolio management. So I think, people are sort of wearing multiple hats. And that is why, you see that in terms of internal IT, it has been actually a bit slower. What is happening now, I think the market, which one of the things which is changing in a positive manner is that in terms of the companies, one of their jobs is actually to track private companies, to scout interesting startups every day. So there is more and more digital information that is available about companies, right? So what the company does, what kind of people it is hiring, what is its products, how does its product compare to others, what are customers saying about the product, etc. So there's a lot of information that is available about private companies, fairly unstructured manner, I would say. And I think that is one of the things that people are also using now, that, how do I sort of mine this set of unstructured information about private companies and make it relevant for me when I'm looking at different decisions, right? When I'm looking at scouting the next set of companies to meet, or when I'm looking to track some of the companies that I have met, how do I use some of these signals to be able to, do my job more easily? So I think that is one of the things that you see happening in this industry. That now that there is so much of data that is available, and so much of digital footprint about companies as well as about people, right? So even if you want to, for instance, find out how good the engineering team of a company is, you can actually get the profiles of all these of the team members, see what is their activity, etc., and then have some sort of sense about what how deep the engineering capability of this team is, for instance, right? So you have a lot of information about companies as well as about people today, and that is what a lot of the investors are also leveraging. That because you have so many sources of information, how do you mine this set of unstructured information which is there about companies to do your job more efficiently?
That's a really insightful perspective, Neha, and thank you for sharing that. And it's interesting to see how AI and other emerging technologies are untangling some of the long-standing inefficiencies in private markets. Especially where it's always been driven by manual processes and fragmented data, and which have traditionally, slowed decision making. So I think with more intelligent systems and platforms, I think we will be improving operational speed and also enhancing the due diligence and investor confidence along the way. Now let's build on that and try to understand more of it. While the emerging AI stack for investors covers a laundry list of investing firm processes, I think every product in it ultimately leverages AI for the same task. I mean, think extraction of financial data from an earnings report and transcript into an Excel workbook. So there are a lot of things that can actually, the manual processes can actually be, more enhanced with the emergence of AI. So I think with all the cases considered, humans are being replaced as the transition layer between documents and data. Now, most of these tasks have historically been impossible to automate, because of rigid or rules-based software, and people have been stuck with manual work because they thought that is the only viable solution. So, how do you think AI is transforming deal sourcing and due diligence, especially when it comes to filtering high-value opportunities and massive unstructured data sources?
So that's a great question, because you've covered two of the key pillars of what a private market investor does. I think what differentiates investor one fund to the other fund. One of the key highlights is your deal sourcing and your deal, and finally the decision of whom to invest in that you take. And so AI is definitely improving a lot of those. And you see that happening in the public markets as well. So, now you have a lot of platforms wherein if you want to get summary of the earnings transcript, or information about the publicly listed companies, now you can actually query it on the chat instead of going through various screens, right? So that's also happening. For the private market, I would say two things which are in which it is getting benefited, I would say. So let's start with sourcing. So the way traditionally sourcing has been for a private market investor is very network based, right? Like someone, or a founder who's starting, or someone recommended this company, right? So traditionally it has been very network based, very referral based, right? And that's obviously very manual work for you to be able to find out companies. Right now people are using a lot of other tools to also be able to sort of scout companies. So you can have sort of AI agents to scout companies the way you would do it, right? They would just be able to mine a lot more information than you can do manually. To give you an example, if you want to invest in founders of particular background, right? Like for instance, Zoha has produced a lot of good SaaS founders. Now you want to track everyone that is coming out of that, like you call the mafia, Zoho Mafia. So you can track all the companies coming out of Zoho Mafia, all the founders who have worked in Zoho and now are starting the company. So you can track that much more efficiently. right? The second way is that you can also, so some of the investors also use some signals to be able to uncover high potential early stage companies. To give you an example, just the fact that what is the quality of engineering team that they're hiring, right? So you use that to actually be able to surface companies. Or the second thing can be, say, just how the headcount is increasing, right? That's also a good metric that the company is sort of breaking out, or they would have found a close to finding a product market fit in the early stages, right? So you can actually mine a lot of those information today to be able to give you sort of high potential early stage companies, which otherwise may have stayed under the radar. So that's on the sourcing part, and then there's a lot of work which is being done, on that, and there are funds which are also making sort of tools to be able to analyze a lot of information and sort of highlight to them, recommend companies to their investment team based on their sector and stage that they have typically liked. So that's on the sourcing part. Now, second, on the diligence part, so that is another interesting thing. So typically, you had a lot of analysts given a company. You would work on, how the market is, how the evolution has been, how is it going to evolve, what are the competitors, etc. Right? Right now, a lot of those can actually be done by AI agents in a much compressed timeline. Right. So just the education about the market. So for instance, you are meeting a company, say in the cross-browser testing space. Now you have to figure out, okay, what that market is, right? Or you meet a company, another interesting area we started coverage on is organ on a chip. So there are companies which can simulate how a drug will act, how an organ will basically react to a sort of a drug, without having that actual testing done, right? So now you meet a company in that, say you're a healthcare investor, you have to find out more about the space. So the whole idea about doing a research of the market, now that has become very compressed, right? So that is one thing which is definitely happening on the due diligence side, and including some of the other steps, which is finding out some of the comms, etc. And for instance, we at our Tracxn have also been doing is that having sort of specific agents for different types of data, right? So we at our end, we actually use a lot of those LLMs and information on top of it, so that we are able to figure out, okay, how do you basically get, say, the result of who's a competitor in a much more better and a more comprehensive manner. So that's on the due diligence. Another one on the diligence, which investors have also been using a lot, is to actually do analysis when they get the information from the company. So when they get the information of the company, just to do analysis on, say, the code repositories, or their customer segmentation, or that has. So there are a lot of tools which have also come about in just helping investors sort of analyze information that otherwise they would have spent a lot of manual hours in analyzing. The third area within the due diligence that has also seen a lot of traction is just legal doc, right? So if you, so unlike in the public market investing, right? Like once you think about investing in a company, you can just do a checkout on that on any of the apps. Like in India, you can do it on Zerodha, or in US, you can do it on Robinhood, etc. Unlike that, in private companies, once you decide to invest in a company and the company is on the same page, you still have to cover a lot of legal ground to be able to invest, right? And that requires a lot of hours. There are a lot of companies which are also helping investors in just analyzing a lot of those legal docs. And whenever a next fundraise happens, then you have to still look back on the of the legal docs of the previous rounds to see what rights, etc., all the investors had, and how does it compare to the new rights, etc. Right. So there are a lot of tools which are coming up, which is helping you do that part much more seamlessly. So I think in terms of both these pillars, I would say which is required from an investor, which is like deal sourcing and deal diligence. I think that is becoming much more efficient thanks to all these AI tools.
Definitely, and I think I'm really glad to understand that AI is actually cutting through the noise to pinpoint those truly, high value opportunities. And it's really incredible to see how these AI and, machine learning models are not just automating data analysis, but are actually enhancing the overall decision making with more predictive insights. And it's this shift is enabling investors and analysts likewise to focus more on strategic judgment, rather than the manual research. Building on that, I would, also like to explore that more about the private market data and, how AI can improve. So I think private markets have long been a black box for investors. Unlike public markets, where data is standardized and readily available, private markets are fragmented, opaque, and also a little difficult to navigate. We, of course, do have many deal sourcing methods. They rely heavily on personal networks, manual research from multiple sources. So, all of which I think limit visibility and, trigger slow decision making. Moreover, I think a lack of accurate comms and valuation benchmarks, hidden market opportunities and fragmentation, and time consuming due diligence can make it very difficult to find the next opportunity. And not to mention, the multiple tools and platforms that are actually required both for deal sourcing and market intelligence together. Now, like I mentioned, that, the private market data is fragmented and opaque. How do you think that AI can improve the data integration and decision intelligence across the entire deal life cycle?
So I think one of the things in which AI is definitely helping is that taking away the need of a lot of the people who would just sort of collate data, right? So now a partner can actually do that in a few seconds. Then what he would have ideally, passed that requirement to an analyst who would have taken like a few days to turn it around. So it is sort of compressing your decision making timelines, right? Because your information is available at a much faster pace today. So you can actually look at the information to take sort of decisions of investments in companies in a much more efficient manner, right? So that is one part which is definitely happening, across the deal investing part. And if you look at a lot of work which is being done by the funds, this is mainly into the first and the second aspect, I would say, of in terms of the time, in terms of the life cycle of a private market investors, which includes your sourcing, deal diligence, right? So if I look at the life cycle of a private market investors, it starts with like a deal sourcing, deal diligence, and then once you make the investment, then your portfolio management sort of starts, right? So there's a lot of tools which say some of the funds are which are more data bent. What they are doing is building internal tools for the first two parts, which is sourcing and deal diligence, which helps them to make sort of better investment decisions, right, internally. Now, coming to the third part, which is portfolio management, I would say there the amount of work that has happened is lesser as compared to the first two. But there are some basic things that people are now using. So, for instance, one of the things that I've heard a lot of investors use is that just tracking your conversations with your portfolio companies, right? So typically, as a board member, you meet them say every quarter, and you have update with them, which is in addition to the matrices, you also have sort of objective updates which you discuss with the companies, right? So one of the ways in which a lot of investors are using is just just tracking your conversations, because there might be multiple team members speaking to your different set of companies at any point in time, and this just helps you to sort of maintain that record throughout across the entire organization. So that is one thing which I've seen some of the investors use. The second thing which I've also used in terms of the portfolio management is just a report summarization. So you have matrices which the portfolio sort of sends on a periodic basis, and how do you summarize and sort of have insights then, say like a junior analyst doing that. The third thing, which is probably lesser used, is also sort of prodding more on the portfolio exit planning. So based on what is the comparables that you're seeing in the market, etc., just planning the predictability of the exit, as well as just helping them give some directional indication as to how can they think about that. That is probably some of the other things that I've heard of. But overall, I would say people have used probably some of the tools in the portfolio performance space lesser, then I would say the sourcing and the diligence in terms of the life cycle of a deal that they that in an investment fund.
Definitely. And I think, when we are able to break down the data silos and creating a more unified view across sourcing, diligence, or even portfolio monitoring, I think AI isn't just improving the access to information. I think it is overall elevating the quality of decision making. And it's really interesting to see how the shift towards decision intelligence is helping investors move from reactive analysis to a more proactive strategies, and they are able to turn that data into real time insights that can actually drive competitive advantage. That brings us, I think, throughout this next stage of AI evolution, I think investors must remember to stay diversified and choose certain things or agendas that have a proven track record. Having said that, one last question for you, Neha. How do you envision the next 5 years of private market evolution with AI?
So I think it's a great time. It's actually very interesting to see how AI is going to impact the private market, the asset class. For the private market asset class, it is both. It's both a tool, right, to do their jobs efficient. Plus, it's also a big theme for investment. So it's a tool to make their sort of the whole workflow more efficient, and that is going to have implications on how our new funds, how easy it is to launch a new fund, for instance. And the second thing is that, that is an investment theme, right? So let me talk about like the first part. So just because, now, for instance, AI is, people regard this as a big investment opportunity, just like, as internet or cloud was earlier. And a lot of things are going to change. Right. So that is just also going to benefit some of the newer funds who are entering this market, because now you don't need very large teams, etc., to be able to run this investment process. Right. So that's one on being used as a tool. The second thing which I'm really excited about is also, how AI is actually a big theme for investment, right? So obviously every investor is now looking at AI companies. And even if you look at some of the stats that AI as a sector is probably one of the most funded sectors. So if you look at say global funding, the largest rounds are in the AI space. So that's a big theme for investment. And there are two ways that it is impacting. So one is, if you look at the infrastructure layer of companies, right, like OpenAI, etc., that layer is very capital intensive. So that is a little bit of a few companies, attracting a lot of capital, and not a lot of new startups being able to come, because you need very heavy capital for that, right? So there are a few companies which are going to give outsized returns, but it is probably limited to a few set, because you need a lot of capital to be able to come into this infrastructure layer of this market. On the second thing, what is also happening on the application layer, AI is actually making the job of or the cost of launching software much reducing. So it is sort of a more deflationary, I would say, in nature for the application company. So now, for instance, if you want to launch an application, etc., you can actually probably launch it in a few days, what otherwise would have taken you a few months, right? Thanks to all these tools which are coming up. And that is obviously going to have impact on the returns of the venture asset class. So you would hear a lot of investors talking about that. Now, for instance, if you're a pure SaaS company, it is fairly difficult, because now it's easy to create a software and launch a software, right? So that is interesting to see how it is going to play out on the application level, because AI is very deflationary in nature. It's making new software easier to launch, right? So that is going to make it more competitive in that sense, and lower the margins of some of the sectors that investors have traditionally sort of got good returns in. So I think this is interesting to see, and how AI is going to impact, as an investment theme for the private market, right? And it differs a lot between, like, what your LLM faces versus, what your application startups are, the way they are going to evolve, right? But I think it's taking time to be an investor now.
Great, definitely. And I think as AI adoption accelerates, deal makers and investors that embrace such intelligence platforms will be better positioned to uncover hidden opportunities, reduce risk, and drive more business. I think the future of private markets is data driven, and AI is the key to unlocking its full potential. Thank you so much, Neha, for taking out the time and effort to be on our podcast today, and helping us understand that investors and private market that are who, I think they should be aggressively experimenting with these new tools to understand what's possible now. And I think if they are able to adopt and invest that, I think they'll be gaining more promising outputs in the near future. So thank you so much for being on a podcast today. It was lovely chatting with you.
Thanks a lot, Priya. Thanks for having me.
Great. So, this is for our listeners. I hope you enjoyed today's discussion. Don't forget to share it within your network and help us know what is something else you would like to know in our podcast in the next episode. You can view all our previous podcasts on Spotify and other leading platforms. Thank you so much.